Good afternoon and welcome to another VSA Capital Tech and Transitional Energy podcast with myself, Phil Smith, the analyst. And this week I have as a guest with me David Scriven, our head of sales, as Andrew Monk, my normal sparring partner, is away on business. David, good afternoon and how are you?
Phil, good afternoon, and thank you for letting me join the podcast. And looking forward to going through the US and some things we've started on in the past and go on.
Fantastic, David. Well, there's certainly been some news from the US on Nvidia and others.
Indeed. So let's kick off. As you know, I tend to go through the ETS. We did that last week, and I haven't really seen any trend changes in that. So I'll just focus on specific companies. Kick off initially with Orsted offshore and wind farms. The company is out reassuring investors over the proposed 60 billion krone share sale, saying it will go ahead as planned. The company plans to publish a prospectus for the capital raise in the second week of September, following an extraordinary general meeting on the 5th. The raise to steady finances follows the Trump administration's move on Friday to block construction of the Revolution wind farm off Rhode Island, which is in fact 80% complete, and concern over similar action against another wind farm it's building off the coast of New York called Sunrise. Now, just to put this in a little bit of perspective, Trump did the same with Equinor, but reversed the stop construction at the Empire project near New York. So this proposed raise is very important. Orsted is at a 10-year share low. But as you alluded to, people looking yesterday with great expectations towards Nvidia's results. And Q2 revenue was 46.7 billion and net profit 25.8, which beat street estimate. Data center revenue, however, was 41.1 billion versus the street at 41.3, so a small miss. Q3 revenue guidance was 54 billion, which was in line with the average analyst estimate. But the H2 chips to China were not included and could give upside to that number. And I think that could be possibly in the range of 2 to 5 billion. Now, Jensen Huang said that the top four hyperscalers capex of 600 billion plus, and in addition to other enterprise companies, support his prediction of AI infrastructure spend of 3 trillion to 4 trillion by the end of the decade. The stock fell 5% after the close, but rallied down 3%. Investors have tech bubble, valuation, and customer concentration concerns. I think a key here is keeping an eye on the hyperscalers' free cash flow generation, as analysts point out that this group accounts for probably circa 40% of Nvidia's revenues. The company approved a 60 billion buyback in addition to 14 billion outstanding. So it was pretty strong results at the bottom line. I don't know whether you wanted to add further.
Well, I just think that it's quite astonishing that they've been able to manufacture the product to meet this growth. I mean, this is semiconductor production after all, and that's quite incredible. But it is all about, keeping a close eye on the capital expenditure from the hyperscalers. And then more news on sort of wider implementation of AI by larger corporates. Because at the end of the day, as everyone's saying, it has to make a profit for people. Artificial intelligence, corporations need to be able to do something with it. So it's looking out for news flow, major announcements in that area as well.
Yeah, my gut is to still continue on this journey and keep invested in the area.
Absolutely, it's early days, I think.
And then moving on and looking at further upcoming earnings, for which we can look out for Broadcom on the 4th and Marvell after the close today. Demand for custom ASIC, that's application-specific integrated circuits, is rising because large OEMs, cloud and hyperscalers are looking for more differentiation, better performance, lower power and costs versus off-the-shelf chip solutions. The digital custom ASIC market is circa 30 billion and is expected to have a 30% CAGR. Look out for Broadcom because they are 55% of the market share and Marvell circa 40% of the market share. For those results in the days ahead. And Phil, I thought you might want to.
Yeah. I was just going to say about the products here, why Broadcom and Marvell have been growing so strongly is that Broadcom's semiconductors are used in switches and routers for networking, but also for wireless connectivity components as well, and storage connectivity in data centers. So it's all about moving data at very, very high speed within data centers. Broadcom also have a software portfolio, and this is enterprise solutions for mainframe applications, security, and cloud management, including a very well-known brand of VMware, which is used in server virtualization, but that's the subject for another day, David. And Marvell is semiconductors for Ethernet, physical layer. This is a hardware component that's an interface between devices and transmission medium like cable and fiber optic cables. They produce Ethernet controllers and optical modules as well. So it's all about the networking and moving the data around the data centers in particular, where the growth is coming from.
Thank you very much. Yeah, we'll look out for that in the days ahead. Now, in software, investors have been flagging concerns over vendors being hurt by a slowing economy and new AI companies taking business away from them. Snowflake jumped and extended hours of trading after the company gave a strong outlook. The quarter delivered revenues of 1.09 billion versus the street of 1.04. Customer numbers were up 21% in the quarter. Guidance was for 4.4 billion in the fiscal year ending January versus the street of 4.34. Snowflake offers products focusing on organizing and analyzing data, but has escaped the sector concern because its platform works with a variety of new AI models. And with that, I thought we could shift to the UK and your thoughts on Softcat.
Yeah, indeed. So, sticking with the subject of software and all things AI, Softcat, 3.2 billion market cap. They had a trading update for the year ending July 2025. The shares are up by 7% year to date. Softcat is a big IT services provider, primarily focused in the UK and Ireland. Excuse me. They provide cloud and hybrid cloud services, cybersecurity, networking, connectivity, which we already discussed, and cyber. They have over 11,000 customers, so this is small to medium-sized businesses. So by looking at Softcat, we do get a feel for what is happening in IT spend across business. They reported in their trading update. They continue to trade well during the fourth quarter, supported by further conversion of larger solutions projects. The board now expects to deliver high teens growth for full year gross profit. High teens growth full year gross profit, but mid-teens growth for the operating profit, and expects to also remain highly cash generative with strong cash conversion. So, good decent trading update from Softcat there. Company that we've discussed many a times on this podcast, and it's certainly being successful, is Filtronic. Ticker is FTC. Market cap now is 311 million. The company specializes in advanced radio frequency electronics that are used in space and aerospace communications for defense telecoms infrastructure. The company works very, very closely with SpaceX. This is the Elon Musk satellite network, and they are designing and supplying ground station amplifiers for that satellite network, and they have received another large order from SpaceX. This time it's for £47.3 million of product. Now, only in July it announced a £13.4 million defence order, and that's for electronic sensors, so a different market in defence, but you can see here that Filtronic is performing very, very well indeed. They're expecting first production units in this contract to ship during their full year, financial year 2007 and into 2028. I'm just looking to see if there's anything else in relation to this. No, so it's gallium nitride and their next generation product lines. I think to point out, I mean, the shares have doubled year to date and are up about 15-fold over the last 5 years. So, I'll just say that companies can perform very, very well on the UK stock market, but it's all about getting good news in, and Filtronic has certainly had plenty of that. Another company that we discussed on the podcast, David, is Journeo, ticker is JNEO, 66 million market cap. Shares are up by 32% year to date. Interesting company this. They provide information systems and technical services to transport operators and local authorities. So this involves the rail networks, but also the bus networks and things like passenger information signage, the digital signage, also CCTV equipment that goes into remote monitoring on trains, but also on buses, and very, very important for preventing crime. Also remote conditioning monitoring on the transport networks as well of equipment. The company had a trading update in July, and it showed that the revenues decreased by 4% to £24.5 million. And we discussed this previously about the trading update. They had a prior contract on the New York City subway that completed during 24. They also, for their first half, that their profit before tax was flat, but most interesting, David, was that their sales order intake increased by 25% to £30 million. And they've got cash on the balance sheet of £18 million, and they've just announced this week that they received a £1 million purchase order from a local authority in the south of England, and this is for maintaining display infrastructure on software on bus service improvements. They've also been receiving orders for fully integrated airport transfer real-time information systems. So we all know about airport transfers and buses and getting information, but they supply the information systems for that, and they've received further orders for those systems. And they, had the first orders with Gatwick Airport, according to the announcement in 2017. So that is Journeo. Now, sticking with airports, Aurrigo International PLC, 27 million market cap now. Now, Aurrigo, we must point out, is a corporate client of VSA Capitals. Now, what do Aurrigo do? They're a leading provider of autonomous ground support technology. So this is ground support vehicles, software controllers vehicles, and vision systems for the vehicles. Why do I mention that? Well, they are autonomous vehicles. They're being trialled globally at airports, where they'll be used to transport baggage to aircraft. So because they're working alongside aircraft, very clearly their software has to be extremely robust. The vehicle technologies have to be very, very robust indeed. So undergoing international trials. The company has just announced that it has raised a total of £13.8 million from investors. Now, £4.4 million of that was through a placing of 9 million shares at 45 pence, but also it received £9.75 million via a subscription from strategic investor Next Gen Mobility Limited. Now, in terms of the funding use, this is to be a further investment in additional software and engineering teams, to relocate to new UK facilities and headquarters, and to fund global patent costs. Now, this company is very rich in IP, and Aurrigo already holds 11 granted patents. So, very, very good news for Aurrigo in terms of that placing. Just to point out, the strategic investor Next Gen is owned by Jonathan Keeling alongside Arthur Global Opportunities Fund, which is an Indian investment fund. So that's Aurrigo International raising £13.8 million. Also, as part of that raise, just do need to point out that there is a wrap retail offer to raise a further £0.5 million at 45p, and the retail offer is expected to close at 12 noon on the 29th of August. So there we are. That's I think our news for this week. David, unless you've anything else, you're very welcome on the podcast as always.
Thank you very much, Phil. It's been a pleasure, and yeah.
And as we always say, if there are any companies that we've missed or any subjects you'd like us to discuss on the podcast in relation to technology and transitional energy, then don't hesitate to get in touch. And we look forward to hosting the podcast again next week. Thank you.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.